If I wanted financial freedom, this is what I do. I'd ask one question. Is my goal to own a home or build wealth? For many of our clients, the answer is both. And there is a strategy that makes that possible. So let me walk you through exactly how it works, how it compares to traditional home ownership, and how to access it if it makes sense for you. If you've been looking at the property market lately, you already know what I'm about to say. Prices aren't slowing down, especially in areas that people actually want to live in. Close to the city, near schools, walkable, lifestyle-rich suburbs. What used to be a stretch is now often completely out of reach, especially for first-time buyers in the more expensive capitals. At the same time, rents are going up too. And the reality is, for a lot of people right now, buying a home to live in means making a lifestyle sacrifice. Moving further out, settling for something smaller, or waiting years to save a deposit while prices continue to rise faster than they can catch up. Now don't get me wrong, buying property is still a smart move. But the problem isn't just buying property, it's buying the right property in the right structure at the right time. And for a lot of people, that doesn't mean buying their forever home straight away. It means starting with the kind of investment that actually puts them on the front foot financially and strategically. This is where rent vesting comes in. And this is what I do if I were starting again today. So what exactly is rent vesting? Put simply, rent vesting is where you rent the place you live in and invest in the place that makes the most financial sense. It separates your lifestyle decisions from your investment decisions, which gives you more flexibility in both. Let's say you're living in Sydney. You might want to stay close to the action, somewhere in the east like Coogee, Rose Bay or Paddington. So buying a home there that you want to actually live in could easily cost you $2 or $3 million. That's a steep price if your borrowing capacity doesn't match it, or if you're just not ready to commit to that level of debt. Instead, you can rent in that same suburb for a fraction of the holding costs and use your deposit to purchase an investment property in a high growth area like Brisbane or Melbourne as an example, depending on what your strategy is, somewhere with solid rental yield, good infrastructure investment, and better long-term upside for your money. Rent vesting doesn't mean you're sitting out of the property market, it means you're entering it with strategy, not emotion. That's an important distinction, because when people hear rent, they often assume it's a fallback, something you do while you're saving, or because you can't afford to buy. But with rent vesting, renting is actually the strategic part. You're choosing to rent where it suits your lifestyle and buying where it suits your wealth building goals. You often hear that rent money is dead money, and that is true, only if you don't buy investment properties elsewhere while renting. Then, dead money becomes smart money. To put that in context though, let's look at how it compares to other common approaches. There are 3 common paths that you can take. So option A is to buy to live in your home, option B is rent vesting, and option C is to continue renting and not buy at all. Each of these comes with trade-offs. So let's break them down across 5 key areas that matter most when it comes to building wealth and maintaining lifestyle. Let's start with flexibility. If you buy to live, then you're tied to that decision. The suburb, the commute, the school catchment, it limits your ability to move around, take up new work opportunities, or adjust your lifestyle without the hassle of selling or renting your own place. Renting gives you the most flexibility, no doubt about it, but no equity is being built. Rent vesting gives you a middle ground. You get to live where you want and invest where the numbers work. No compromise on lifestyle, and you're still building your financial future in the background. Another key area you may not have considered is tax. Owner-occupied homes don't come with many tax advantages. There's no income, so there's nothing to deduct. But with rent vesting, because your property is an investment, you're entitled to claim things like interest on your loan, depreciation, property management fees, maintenance costs, and other things as well. If it's negatively geared, that can reduce your taxable income at that point. Renting only offers no tax benefits and no asset growth, which means you're simply absorbing rising costs of living over time. The third key area I want to look at is long-term wealth options. I'll use this example to illustrate this. A couple we worked with, let's call them James and Sarah, had around 1 million in borrowing capacity. They were thinking about using it to buy a unit in Sydney to live in. Instead, they went the rent vesting route because they wanted to continue living in the house they were in, which cost around 3 million and was out of their budget to buy, but it was in their budget to rent. They rented in Bondi for the lifestyle, the parks, the beaches, the restaurants, because it was close to work. So we helped them purchase a $560,000 house in Logan with strong upside potential and great rental yield. They bought around this range as they were held back by savings but wanted to get into the market. 2 years later, that Logan property was worth around $750,000. They then released equity and we purchased a property in Lower Moreton Bay for them for around $820,000. It's in a suburb called Bray Park, which I actually own a property in. That property is now worth around $950,000. So they went from $100K in savings at the time, which was enough to purchase around a $600K property, to a $1.7 million property portfolio in less than 3 years, only using that $100K initial upfront investment. And we are currently working on their third property, which will be a property in Melbourne. The last area is about the psychological and emotional factors of buying property. This is usually the part that holds people back from rentvesting. There's a lot of emotional weight tied to owning your own home. Security, pride of ownership, and sense of permanence. For some, that's important, and if that's the case, then yes, buying to live in might be for you. But the flip side of that is financial freedom also brings security. And rentvesting doesn't mean you never own your own home. It means you don't start there. And that's an important distinction. You build wealth through smart investments first, and once you're in a stronger position, you can choose the home you want to live in with more confidence and less compromise. When you look at it across all 5 of these dimensions, rentvesting presents a compelling alternative, doesn't it? And for many people, especially those priced out of where they want to live, it is a far better entry point into the property market, in my opinion. And it's an entry point that got me into the market 7 years ago. At the beginning, I began rentvesting because we lived in a high-rise unit in the CBD, which I thankfully realized would be a terrible investment, so we continued renting and began investing in high-growth assets. Like the first property we purchased in Brisbane for $445,000, we recently had it revalued for just over $1 million. The property was rented for $450 per week back then, and is now renting at $650 per week, soon to be $700 per week. As time passed and we were in the accumulation phase, purchasing more properties, we were rentvesting for mostly financial reasons. Taking advantage of the tax benefits of rentvesting through negative gearing. We also like the flexibility of rentvesting, particularly when it came to choosing school zones. We practically had every school in the city to choose from, and were not bound by anything. We also live in one of the most expensive suburbs in Australia, and to buy where we live currently versus renting there would cost us about 2.5 to 3 times more per year to live in the exact same place. It just wouldn't make sense at this current time. We will continue to rent, watch our assets grow in value, and buy a home in a few years' time when our overall rent and income relative to the asset value and the debt we would take on to purchase our forever home makes sense. When we began rentvesting, I thought there was a reasonable chance that we might regret the path we chose versus the traditional path of home ownership. But the longer I have rentvested, which is approaching a decade now, the more thankful I am for choosing that path. We have given up nothing on the lifestyle side, and in fact increased our lifestyle by continuously moving into better areas. Plus, we have gained a lot on the financial side by holding high growth assets and offsetting deductible expenses against our taxes. Of course, rentvesting isn't the right strategy for everyone. That's not what I'm saying. But if you're clear on your goals and understand how the numbers work, it can be a very effective way to get ahead without compromising how you live right now. Here's a simple framework you can use to assess whether rentvesting makes sense for you. First, start with your income and borrowing capacity, because this will shape what's possible. If your borrowing capacity doesn't stretch to a home that you actually want to live in a suburb that you want to live in, then you're left with 2 options: compromise on where you want to live, or separate your investment from your lifestyle. Which leads us to the second part of the framework. Compare where you want to live and what you can afford. If there is a gap between where you want to live and where you can afford to buy, rentvesting bridges that gap. You can rent a place in a lifestyle suburb closer to work, family, or community, and invest in a location where the price point makes more sense and the growth potential is strong. If these 2 areas don't overlap, rentvesting keeps both options open. Third, consider your priorities. Is it lifestyle, equity, or both? This one is personal. If your top priority is having full control over your home, like renovations, pets, long-term stability, then rentvesting might not be what you're looking for. But if you're looking to build long-term wealth and still want to maintain a certain lifestyle in the meantime, rentvesting creates flexibility. A lot of our clients are in that position. They're not choosing between lifestyle and investment, They're just not trying to achieve both through the same property. Another important factor you need to consider is your risk profile. Some people prefer to have control, and that often means owning their own home. Others are more comfortable taking a strategic approach, even if it feels less conventional. Rent vesting requires you to be okay with a bit more movement in your personal living situation, but it gives you a more productive use of your capital. If you're comfortable with making that trade-off, it can work in your favor. And the last thing to consider is your access to advice. This part matters more than people think. When you're making investment decisions, especially ones involving property, finance, tax and structure, you want to get it right the first time. That doesn't mean you need to know everything yourself, but it does mean you need to get the right people around you. These are people who understand your goals, your numbers, and what is happening in the market. And once you've got that support, the next step becomes a lot clearer. If this is something you'd like help with, we do this every day with our clients across Brisbane and Melbourne. There's a link below where you can book in a call. And even if you're not ready yet, hopefully this video has given you a clear view of what rent vesting actually is, how it compares, and how to know if it's right for you. Cheers.